Hello everyone and welcome. Today I want to present a video on how to succeed in trading in 2026. We will look at everything related to macroeconomic reading and currency indices, and finally currency pairs. So 2026 begins. If you want to succeed in trading this year, you will need to stop doing what 90% of traders do. That is, trading is not about looking for signals. It's not about stacking indicators or trading a currency pair without understanding what's behind it. In 2026, the traders who will survive are those who understand the global context even before opening a chart. Today, I want to show you how I do it personally. No promises, no gains to flaunt, just market reading. Simple. In part number 1, we will see the framework, which is very important, okay? Because a currency pair is never traded alone. In the second part, we will look at the analysis of the DXY, which is the dollar index. The third part, we will look at the Euro index, which is the EXY. The fourth part, we will look at the currency pairs I want to position myself on for 2026. In the fifth part, I want to give you a key message for success in 2026. Okay, let's begin. Right now, I am on the DXY, the dollar index here. I am on a 4-hour chart, which means each candle represents 4 hours. As we can see here, right here, I have my downward trend. Here we see that the market has come to test this oblique resistance several times. As you can see here, a first time here, a second time, 3 times, 4 times. Just below here, I have outlined my support. We see that the market has come to rest on it several times and was rejected upwards. Then here I have my price zone quite simply, which is at 98. 700 round figures. I will illustrate it there. What I am simply waiting for is for the market to come here and be rejected by the resistance. Then it comes back here and breaks here. In any case, I will wait for the market to break the round numbers, the price zone, at the level of 98,700 to be able to enter a position. If the market breaks through the price zone, I will favor buying on all currency pairs that start with USD XXX. As you can see here, USD XXX, I will favor buying these currency pairs, quite simply. Then we move on to the Euro index, the EXY. As we can see here, I have outlined my support. We see that the market bounced off it, it got rejected, bounced off it, it got rejected. Here, it broke the price zone, and here, it got rejected. Personally, what I will wait for is for the market to break the support here to possibly take short positions on everything that is currency pairs like EX, XXX. That is, I will favor sales on all currency pairs that start with Euro XXX. There you go. It's very simple. If the euro goes up, the dollar goes down, and vice versa. If the dollar goes down, the euro goes up. Then we will look at the currency pairs on which I will position myself. We start with USD CHF, so the US dollar against the Swiss franc. Here we can clearly see that the market has bounced several times on the oblique resistance. Here it has touched it several times, okay? As we can see here, once, twice, 3 times, 4 times, 5 times. Here, look, I have my price zone that I have outlined at 79,600. Here, I have my alert. So if the market breaks through the price zone, I will favor buying the currency pair USD Swiss franc. Then we move on to USD CAD, as we can see. Here, I have drawn my oblique resistance, so my descending channel. Right here, I have my support Okay, and here I have my price zone. So we are right at 1.38,000. Then here I have my second price zone. We are around 1.39,500. Okay, so exit zone number one, exit zone number two. Next, we move on to the Euro USD, quite simply Euro USD. And I'm waiting for the market to come there. Here, I have set my alert. I'm waiting for the market to trigger my alert, and then I'll move the alert just below the price zone to favor sales on the Euro USD currency pair. As you can see here, we have something like a double top, first top, second top. Okay, here we see that the market came to break the support. There, here it settled on the support. It was rejected by the resistance. Theoretically, it should reach the level of 1.68,000. Okay, EuroCAD. It's simple, same scenario here. We see that the market has settled on the support. First touch, second touch, third touch. Here we have the price zone. The market broke it, and now we will wait for it to break the resistance again to potentially take buy positions. Okay, next on GBP CHF. So the British pound against the Swiss franc. As you can see, we are on a upward trend. Here we see higher lows and higher highs. So theoretically, I'm waiting for the market to break the price zone at 1.07500 to potentially take buy positions to reach the TP, which is right here, the exit zone number. And then we have CHF JPY. So the Swiss franc against the Japanese yen, knowing that the Japanese yen is currently very bearish. So here I will switch to 4 hours. As we can see here, we have a kind of descending triangle. We see that the market here has been rejected several times. First touch, second touch, third touch, fourth touch. So here I have drawn my price zone at 197,200. My alert went off right here, and I favored selling on the CHF currency pair. I could see, okay, so my principle is simple. I don't look for the pair of the day. I look for consistencies between currency indices, market structures, and the currency pair. If everything is aligned from there, I monitor as I just did while setting my alerts. And if it's not clear, I don't trade. Okay. So in 2026, not trading is often the best decision. So if you want to succeed in trading this year, you must stop looking for perfect entries. Perfect entries do not exist. No matter how much I repeat it, perfect entries do not exist. So start by looking for a clear context. Okay, then a logical direction. Follow your simple trading plan. You need to have a simple trading plan. Okay, a mechanical strategy and disciplined execution, and that you must never forget. The market has nothing to prove to you. You're the one who must be ready. The market owes you nothing, absolutely nothing at all. Okay, so the more disciplined you are and the more you follow your trading plan and strategy to the letter, everything will go well. Sometimes you can follow your trading plan and strategy to the letter, and the market is irrational. The market turns against you, but it's not a big deal when that happens. You just have to follow your trading plan. Okay, so on your trading plan, normally you have your money management, you have your drawdown management, and you have your profit management. It is very, very important because I see many traders who trade but have no strict, clear, and defined trading plan. So the conclusion is that here I am not selling dreams. I am just documenting my process. So if you want to learn to read the market before clicking buy or sell, you are in the right place. As we say at Process Trading Live, the shadow builds silence in a box. I wish you an excellent day and say see you soon.